Are you sitting on the sidelines of the greatest wealth creation event in human history? Or are you about to get crushed by a multi-trillion-dollar AI bubble? How can both of those scenarios feel so incredibly real at the exact same time? Okay, let's dive straight into this explainer and unpack the unprecedented economic realities of the AI boom, pulling directly from the insights of the A16Z partners. We are going absolutely zero fluff today, relying entirely on the hard facts and the raw data they're seeing on the ground. So, which is it? Are we in a bubble, or is this the wealth creation event of a lifetime? To figure that out, we've got to look at the exact numbers from the source material and challenge some really counterintuitive truths about the market right now. The interview highlights this massive, glaring disconnect between the staggering scale of AI companies and the average worker's daily reality. Let's start with the sheer scale of the exits. Back between 2020 and 2024, the baseline for a top 1% startup exit was $10 billion. Now, that was already an astronomical figure, right? It represented the absolute pinnacle of venture capital success in the previous software generation. But then, boom, by February 2024, when the A16Z team updated their data, that baseline number literally doubled to $20 billion. This happened in a remarkably short window, signaling a massive acceleration in value creation that frankly caught even the experts totally off guard. And the acceleration here is just staggering. As of yesterday's update in the source data, closed top 1% exits now sit at $32 billion. That is a 10x scale-up over just 24 months. The outcomes keep getting bigger, and it's happening much, much faster than in any previous technological cycle we have ever recorded. And if you look at pure revenue generation right at the top, Anthropic and OpenAI are pulling in more revenue per month than Meta, Google, or Microsoft. The A16Z partners note that the combination of just these two companies alone is projected to hit a $200 billion revenue run rate by the end of this year. I mean, they are outperforming the massive hyperscalers in raw revenue added. Which brings us to the core paradox of the current landscape. If the top labs are scaling faster than anything we've ever seen in business history, why isn't every single company entirely automated by now? Why does the enterprise workforce feel mostly the exact same? Well, the source explicitly calls out that the actual diffusion of this technology into the real economy is currently less than 5%. Think about that for a second. Less than 5%. This represents a massive latent opportunity. The Fortune 500 collectively generates about $2 trillion in annual profit. That 95% of untapped potential, that is exactly where the next decade of enterprise value is going to be fought over. Now, the native AI companies going after this prize run fundamentally differently than your bloated previous generation SaaS businesses. According to the source, older SaaS companies were actually quite inefficient, but their great business models and constant headcount growth just masked it. Native AI companies, on the other hand, are lean, they're aggressive, and they're highly proactive. You've literally got researchers out there who aren't even typing, they're whispering to swarms of agents. They're built from the ground up for a totally new era of proactive engagement. But here's the catch. Being built differently does not guarantee your survival. The half-life of these new companies is brutally short. Listen to this extracted stat. 40% of the companies on the Forbes AI 50 startups list dropped off entirely from last year to this year. That is a massive year-over-year churn at the absolute bleeding edge of the industry. So with that kind of insane churn, who actually captures this unprecedented value? Predicting the single winners is getting incredibly difficult. We know the outcomes are going to be huge, but identifying exactly who will capture that value is the ultimate challenge. And because of this, A16Z focuses on multi-trillion-dollar variables rather than trying to guess a single winner. These are the definitive metrics to watch. First off, you've got to be in the token path. Market structure matters. If there are 5 frontier competitors instead of 2, token prices drop, which benefits the broader economy. Then there's open source distillation, which is a major threat to the big labs because it currently costs only about 2% of a large model's pre-training cost to distill it. Finally, geographic pressure is very real. Leading LLMs in China are about 6 months behind the US in capability, but they are a staggering 10 times cheaper. And this leads to a super counterintuitive truth about early stage investing in this space. Boasting a 0% loss ratio is actually a horrible data point in venture capital. It means you're acting like a private equity firm and you're not taking an appropriate amount of risk. The historical reality is that early stage funds have a 60% loss ratio. Yep, 60% of deals do not return invested capital. You have to take those specific risks to capture the massive power law winners in AI. So, with all this capital flowing and historically high valuations, we have to ask the big question. Does this mean we are currently in an AI bubble? Well, the hosts answer this directly, not by looking at software demand, but by pointing to hardcore physical hardware and energy constraints. The real reason we aren't in a typical bubble is that we are severely supply constrained. Bubbles are usually characterized by excess supply destroying economics. Right now, there is not enough compute, memory, power, or infrastructure. In fact, data center capacity at scale is basically totally unavailable until late 2028 or early 2029. We are strictly supply constrained, not demand constrained. The economic justification for this physical infrastructure is just massive. They evaluate whether spending $5 trillion of capital expenditure can realistically yield $1 to $2 trillion of revenue as a return. Given that just 2 top model companies might hit a $200 billion run rate this year alone, the A16Z partners actually expect this equation to balance out over the coming years. But for that to happen, an enormous ecosystem has to thrive. To quote Bill Gates, as referenced in the source, the value of the companies that are built on top of you need to exceed the value of the platform itself. This basically means a massive wave of deeply valuable native AI applications must and will be built on top of these frontier intelligence platforms just to justify the underlying hardware costs. All right, let's lock in on a hardcore fact checklist to rapidly realign on every exact number we've extracted today. Top 1% exits scaled from 10 to 32 billion in just 24 months. Top labs projected 200 billion combined run rate. Real economy diffusion, still less than 5%. Forbes AI 50 churn is sitting at 40% year over year. Historical VC loss ratios sit at 60%. Model distillation costs just 2% of pre-training. And we are waiting until late 2028 or early 2029 for new data center scale. These are the uncompromising facts driving the future. Which brings us to today's takeaway. Generational wealth in this cycle will be captured by lean, native AI applications operating in a severely supply-constrained, high-churn environment. Those extreme physical constraints are actually the very thing protecting the ecosystem from a demand-side bubble. Now it's time for our hardcore debate. Hit the comments and tell me, do you think this $5 trillion CapEx math actually adds up? Or are we sprinting headfirst into a massive supply-side trap? Is this a genius design or a massive pitfall? Detail your reasoning below. I really want to see your arguments. And hey, drop a comment below right now, and I'll send you the exact mind map and source data breakdown from today's explainer so you can track these multi-trillion-dollar metrics for yourself. I'm going to leave you with one final thought to chew on about your own future. With the pace of value creation accelerating at a rate entirely unprecedented in human history, how is this intelligence shift going to change the exact way you live and work? Stay sharp, keep learning, and I'll see you in the next explainer.